This video will discuss the benefits of running the classic market profile on the INX. While we are ultimately going to use the premium to execute our trades, knowing where the profile lines are on the INX is a critical part of trading accuracy, because of course the premium is made up of the INX as well as the ES. Knowing where the INX is likely going to pivot becomes a key factor in knowing when reading the premium becomes more important. Okay? So, without further ado, let's just take a look at some historical data. Now we're here moving forward from the 8th of December, and we're getting into all-time highs here. Now we've just plotted the classic market profile from the 8th forward, just to give us a little bit of data. When we use the classic profile, there's more than one way to set up this particular indicator. For example, one way is to just use the POC, the upper and lower value areas, without necessarily watching the details of the volume. So the show volume at price is set to false. And so the classic method for plotting the profile is being used here. Now there is more than one way, and we'll show you that difference in just a moment. But we're using, in this particular case, a 60-minute chart to generate this data. And as the market is moving up here, knowing where the profile lines were on the previous days is just a critical part of the equation of knowing where the market's going to move. So, for example, if you just study the chart here, you can see that, like on this particular day, on the 12th, that the market moved down to the POC of the previous day. And that's pretty much where the market began to find strength before it rallied up. So, as you look for a potential short here, you have that as a target. Once it hits that target, that's where you're going to look very closely at the premium to determine whether or not you've got some divergence there, and whether the market is likely going to pivot and start moving up once again. Go to the 13th. Now we're at all-time highs. All right, we're at all-time highs on this day, so you're not going to have any profile to work with on that particular day. However, on the next day, as the market begins to retrace, we open right in here. Okay, there's your open. And as the market moves up, where is it headed? To the POC of the previous day. Okay? Now, ultimately, it begins to move down. And as it moves down, it breaks through the low value area and comes right down to the area where the greatest amount of historical activity was. And there you found support. Now as it moves back up, it moves up to the upper value area from the previous day, and then ultimately moves down to the POC 2 days hence, as you can see it right here. And then okay, it gets a little support, moves back up, and finally dips back down. Well, where did it stop? Well, look at the history. Now here you have the POC from several days back. We don't quite make it there, but we do make it right there. Finally gained some support there. So as this market was moving down, all right, it became important to know where these value areas were to determine whether or not you had any kind of divergence when you arrived. Now, we won't go and look at all of that information in this video, but that's what you would be doing, because you know you've got potential support at this level, at that level, ultimately at this level as well. So you just have to know where your levels are, and then watch the premium carefully to determine whether you've got divergence. It's really that simple. On the following day now, on the 15th, market opens approximately where it had closed on the previous day and starts moving up. Where's the target? Point of control of the previous day, as well as the upper value area, are potential targets. And what happens? It does move up to the upper value area of the previous day. That's when you're going to be looking very closely at any divergence in the premium. No doubt you found it, and down she comes. Okay, it's a nice roadmap here. We'll go forward again. On the next day, market opens up, but fails to make it to the upper value area of the previous day. Shorts. Where's it going to move down to? Well, from there, the previous day's POC is a potential target, as well as the low value area, and that's good money. This is very good money. Ultimately, you've got now the low value area of the day previous to that, and the POC of the day previous to that, as well as the low value area shown here. Now, ultimately, it moves down and splits the difference between these two before it begins to find some support. But knowing your patterns, you know this is a red day down, this is your high, so toward the afternoon, you know your low is going to be in the last half hour. So again, having those levels and watching carefully for divergence at that point becomes very, very helpful. But you're watching the INX. Now, it doesn't mean that you're not watching the ES. You're watching that too. But if you're not watching the INX, then when you pull the trigger, you know, is going to be substantially impacted by failing to take that information into consideration, because the ES is going to continue to move in a particular direction until the INX is ready to pivot. And you've got to have these levels well in mind to know when that divergence on the premium is going to become most critical. So let's move forward just a few more days, and we'll complete this thought. Following day, market opens up, gains support right at the POC of the previous day, and starts moving up. Where's your target? Upper value area of the previous day, POC of the day previous to that is the next closest profile line. And we move only slightly higher than that POC here before there's no doubt some divergence in the premium there and the market begins to move back down. And of course, it's going to spend the majority of its time in between the upper and the lower value area on any given day. And that's, of course, exactly where it moves down to, and a little bit further, right back to the low of the morning. Following day, market moves up, low of the morning, really at the open, is the high of the previous day. As the market moves up, your target here, all right, the upper value area from 2 days ago, or the POC, all right, or the upper value area here on that previous day. All of that is potential area where the market could pivot. And it moves up that high to the upper value area, and we have no more strength, and the market begins to move back down. Where is it going to head to? Low value area. Okay? And bounces between the low value area and the upper value area. But ultimately, again, moves down in the latter part of the afternoon, back to the low of the morning. Okay, so that's the whole point here, is to make sure that you know what those levels are. Now, we said that there's more than one way to draw these. Now, when you're using when you're just trying to get your numbers, we recommend using the 60-minute chart. But when you're actually trading, you want to use something that's faster than that. All right? When you're watching the levels propagate, you want to use maybe a 15-minute chart or even a 1-minute chart. But before we go into that, let's move forward to the present time so that we can show you how that looks in real time. Now, in this particular workspace, on this chart, again, this is a 60-minute chart. You basically see the profile the way it looks. Over here, however, it's going to appear different because we're not using the same setup. Here, we're not using the brackets. Instead, we're using the volume. Okay, we get a little bit more definition this way when we're running this in real time. Now, you have to be collecting tick data in order for this to work. But this is how it appears. Okay, so it's going to, your profile lines, your upper and lower value areas are going to be the same using this approach. But you're going to have a little different type of data showing up when that takes place. And you can see how the market moved down to this low, which is effectively the low of 2 days ago. Found support and began to move higher, back up to the point of control. But you can see that particularly as it moves up here, right there on this at this particular time, as it's moving up to that upper value area, you'd be watching very, very carefully to see whether or not there was any divergence. And ultimately on that bar, boom, this market really came down fast. Didn't come down to the low value area, but that's where it was headed. All right. POC, previous day, is down here. So you can anticipate that this market is looking to move in that direction as it loses, as it begins to short here. And that's what happened. Moved all the way down. It took a while, but that's what it did. Now watch how this becomes relevant. As this market was moving down here, the target is pretty obvious. It's right in here. This is the low of 2 days ago. The low at that time, let's bring it up, 2336.45. Okay? So, when we hit that, ultimately, it moved a little bit lower, about three-quarters of a point on the ES. All right, because this low here was at 36.74, or pardon me, 35.74. This was at 36. Okay. The ES moves down to 31.75. This was at 32.75. So right as it's coming down into 32.75, which was the low on this day, you're watching very carefully what the premium is doing. Let's take a look. So right as the market is moving down there on this bar, it busts through that low at 32.75 and takes it to 32.25. Okay, 5-second chart here. And you've got a new low on the premium, so you know it's going to drop a little lower. Ultimately it does, but once it's dropped just a bit further, because that's where you really need to be watching this. Now you see, okay, now you got some good divergence in here, and up she goes again. Know where the levels are. Okay, so that hopefully will give you a basis for watching these levels, some instruction on how to read or when to read the premium in conjunction with the established levels on both the INX and the premium become very, very important and very useful for knowing when to read the premium, when that's most important. Okay? So these days I'm spending less time watching the YM and far more time watching the INX. And we're doing very, very well as a result. That completes this video.